What's up everybody? Welcome back to the channel. My name is Vukasakhecapital. I am the director of Vukasakhecapital, and today we're doing our second installment of the series where we're talking about financial assets and asset classes. Before anything else though guys, please do us a favor. Give us a like, hit the subscribe button and hit the notification bell. It really helps notify you every time we drop in content, as well as if you have any questions or queries, just leave a comment down below, or if not, hit me up on my social media, on Instagram, Facebook, under the tag at Vukasakhecapital, or my personal one at Masonabechobonga. If you have any professional queries, just write down below. Email me at vukasakhecapital@gmail.com. And yeah, so let's begin. Whoa, okay, before anything else, I actually have to say this for legal purposes. Guys, before you make any decision, please speak to your financial advisor, someone who's regulated under FSCA, who has a license to give you financial advice. Everything that I talk about on this channel is just for discussion purposes, okay? We're just sharing information. I'm not telling you what to do. So please make the smart decision. Get yourself a financial advisor before you make any rash decision when it comes to your money. All right, I had to say that, guys. Legality. Let's carry on. In the first video that we did, we talked about the first asset class, which is the most common one, which was cash and cash equivalents. If you haven't seen that video, please do check it out. I'm gonna leave the link down below in the description box. It's a very interesting video where I try to go back so that everybody understands cash. It's something that we all utilize, and it's the easiest asset actually to get into. But anyway, today, as I said, we're talking about real estate. And real estate is a little bit more complicated, but what I will try to do is basically make it as easy to understand for the average person on the street, especially for young people, because as I said, this is what the channel is trying to achieve, to educate and empower other people around our communities, from different walks of life, whatever. Okay, real estate is usually like the asset that everybody talks about when they tell you to build wealth, and there's some truth in that. Because when you purchase real estate, it's an asset that is tangible, meaning you can point to it and hold it. But what most people leave out is that in real estate, there's basically two things. It's not one thing. There is land and building. You can either purchase the land or the building, or you can purchase the building but not the land. It's usually one of the two, or both. Now, most people think it's both, but it's not mutually exclusive. Now, the reason and the purpose why most people purchase real estate is usually between two reasons: for commercial or for private use. Meaning it's gonna either be your home where you wanna stay and reside in and build your family or build yourself, or two, you wanna create income out of it, rental income, by leasing it and renting it out to other people. Yeah. Now, those are usually the two main reasons why most people purchase real estate. They either want to put their money in something that's going to be tangible and that's going to grow value and money over the years. So yeah, or two, they just basically want to live and have an asset that is also growing with them, but they're utilizing it for their own personal use. Let's get past that. The four most common types of real estate, because it's not just one category. As I said, the first one is residential, where you stay. The second one is commercial, meaning that you're leasing or renting the property that you own. It can be to other families or to other individuals, or even small businesses, like a shop or something. And then the third one is industrial real estate. Industrial real estate now deals in factories, it deals in large scale production houses, meaning you purchase this exclusively to rent out your space, and you build a warehouse, and you're going to be renting out to big businesses who produce or manufacture or do logistics and such like that. And then the fourth one is land, meaning you bought real estate just purely for the land, either for agricultural purposes, or you needed that land space because you're gonna develop it in the future, or you're gonna rent it out to other business people in the future who want to build on it. So these 4 categories of real estate, you need to understand that when you're going into real estate, which one of these you're going into. You need to be able to be responsible for your assets. So if they're going through some trouble or some issues, there's some legal implications when people are living on your property. And once contracts are signed, you need to be able to have some cash stashed away to help with the busted geyser, with the security, with maintenance, when it comes to different things. So that one is just I need for you to be aware of these things. So you need to do your research into what kind of real estate are you specifically going into. Now that that's clear, let's say now you know this, you know the type of assets you want to purchase, you know the type of real estate you want to go into. Now you're at a stage of, what do I need to purchase real estate? This is obviously a general need to-do list, or things that you need to purchase real estate. I'd advise you to please speak to a financial broker. No, not a financial broker, I mean a real estate agent. A real estate agent is someone who can be able to give you a market assessment, because you also need to understand where in the economic cycle or business cycle that you're going into, because there's ups and downs in every market. It's a relatively safe industry, but like I said, nothing is guaranteed. So when you're going to put an investment into real estate, you need to be understanding where exactly on the graph that you're coming into. You don't want to purchase a property at the peak when it's about to drop and the price goes down, and then you're left basically struggling in how to sell it. But because there's a time when there's more buyers than sellers, and there's also a time when there's more sellers than buyers. And if you're gonna be the person who's purchasing the asset when there's more buyers than there are sellers, then obviously you're at a demand. People want to purchase property so you can flip it. So that's when you purchase a house, fix it up, and then sell it again. But if you're in a market whereby there's more sellers than buyers, then you know that your time span has to be a little bit elongated. Then you can be able to purchase property, fix it, and then rent it out. You're not trying to sell it, right? Because there's more people selling than there are people buying. So it's a more competitive market. So people are looking for a good deal. And if you're trying to make returns out of that, you're not going to be in a good position to negotiate. So, like I said, it's very important for you to do market research and understand where you stand and where the economy is, okay? And the person to help you with this is a real estate agent. They're the person going to give you good advice, and as well as to conduct your own research. It will be more beneficial. But let's go through the to-do list, like I was saying. Sorry, I got in a little tangent. When you're going to purchase real estate, most of the time they require at least like 10% of a deposit. So let's say you're purchasing real estate worth the value of 1 million rands, and you need to save up 100,000 rands. My personal opinion is that it will be better the higher the deposit that you're making on your property, the percentage. It'll actually benefit you because you'll have lower repayments per month. It'll help when it comes to it'll basically help with your balance to pay it off quicker. It'll also help because if you're purchasing it cash, then why are you laying a deposit? But if you're purchasing it utilizing a bond, it means that you're taking a loan for 900,000. But the larger the deposit that you place in means a lower bond that you're placing. So even the interest payments will also be smaller. So I wish you could make a larger deposit so that you can have a lower liability. You can be able to repay these things and also get a good interest rate because your amount is not so heavy. Now, if you lay down, my personal opinion, like I said, is between 20 to 50%, in that range. If you can be able to lay that down, it'll affect you tremendously in the repayments. So you lay that the deposit, as I said, the minimum is usually 10%. And then the second one, you do need a good credit score. A credit record and a credit score will affect the interest rate that you're charged. There's usually two types of interests that are charged to people. It's either a rate that is set, meaning that once you and the bank agree with this percentage that you're working out your repayments. It's going to be like that for the 10, 20, 15 year bond that you have with them. So this rate, if it's 12% or 13% or 14%, it's going to be that percentage forever, right? And then there's the variable interest, meaning that depending on the Reserve Bank and their rate changes, it also affects you. So the interest rate that is attached to the Reserve Bank and the percentage changes and the market changes, then also your interest changes with it. So before you make a decision into which interest you want to be charged, you need to do a research also again into where specifically the economy of your country is residing. Are you guys in a upshift, downshift? Do you think the Reserve Bank is going to increase or decrease? Because as I said, there's pros and cons to both of these things. I think in a later video, we'll do a more detailed conversation about that because it's way more complicated than I'm making it sound. And then obviously, you also need to be very much aware of the costs of purchasing. When I say the costs of purchasing, you put in, let's say, the 20% of the million. So you put in 200,000 rands, but there's other costs involved when you're purchasing a house or real estate that is already in ownership. When it's owned by somebody else, there's things like transfer duties, there's fees that you need to make, there's legal fees of transferring the deed. You know, there's other costs involved, which can end up being around about 10% again of the overall property. So another 100,000 that you need to have on the side for all the legal stuff, for all the things that are required to move it over. But as I said, it depends on the real estate that you're going into. If you're just purchasing something that is a new development, meaning it just got built, obviously there's no transfer duty. It's just the people who built it will just create a new title deed for you. So the costs will vary. It really depends on which kind of real estate that you're investing into. But basically what you're trying to achieve is, and if you get a bond, by the way, guys, your name might be on the title deed, but it's not yours until the payments are done. Whatever agreement that you came up with the bank, only on the last day when you make the last payment will it be yours. Anytime before then, they can actually take it back. I know, that would be terrible. But anyway, when you're gonna go into real estate, you need to be able to have at least these three things. My personal advice is always, and I mean always, set aside some cash to reinvest into. So let's say you get a bond, you see a house or real estate, I'm not gonna say house, let's say you see a property that is worth R1 million. Don't take a bond, take a bond with a little bit wiggle room so that you can be able to reinvest back into it to improve and upgrade it, right? Because there's a difference between the price and the value of a property. If you purchase, the price is what it's listed at. So like whatever the R1 million that they said they want to sell it to you for might not necessarily be the value of the property. If you want to own real estate, my advice is always reinvest into the real estate to make it better. So if you purchase a 3-bedroom house with a little bit of fencing and one small garage, if you're able to take another 200,000 rands from the bond and then put it back into the property, meaning you're going to be adding, I don't know, another bedroom for a larger family, or you're going to be creating a laundry room, something that's going to grow the value of it, you know, so that when you do a reassessment of how much it's actually worth, they'll recalculate it, and then you can be able to get more value out of it. So when you're renting it out, you can actually get a higher price so that you can make your payments quicker. Now, let's talk about the payments thing. When you're making a bond payment towards your real estate, your payments usually pay off the interest and the principal amount. The principal amount is basically the bond that you took, meaning the 900,000 rands, right? If you lay down 100,000 rands deposit, the 900,000 rands is the principal. That's the bond you're actually paying off. and then they're going to charge you an interest on the 900,000 rands. I think the last time, actually I'll make an example of the current interest rate. So that's the interest rate that they're charging you. When you're making those payments, the first thing that you have to pay off is the interest. That's how most banks work. They calculate each payment in the first couple of years towards paying off your interest. So you're not actually laying down equity into the business, into the property. But if you make payments above, the calculated basically amount that they give you per month, the excess amount left after the payment that they suggested goes towards your equity, meaning that you're buying now, that portion goes to the principal amount. So if you can pay a lot more than they suggest, this will help bring down the debt repayment, every time. It will help you balance it out. It will help you obtain your property or your real estate quicker. This will be beneficial for your credit record. This will be beneficial for you because now you can own your asset way quicker and way easier. Now, I don't want to go too complicated with this because, like I said, this is just an overview video where we talk about real estate. There's so many different avenues. There's so many different things about real estate that you need to understand. And later on, we'll probably do a more intricate video where we talk about the interests and how it's calculated and what it means, the pros and cons. We'll probably do another video where we're talking specifically now when it comes to commercial property and the different ways to make it, because now there's even Airbnb where you can make money over the internet with your house. We'll also probably talk about when it comes to industrial real estate, how you can be able to secure contracts and what specifically should you be looking into when you're trying to go in that direction, as well as in agriculture. I'm a person who's very passionate about agriculture, so I feel like how you can be able to use the real estate that you have and basically create some returns and some money out of it. But like I said, this is just an overview for you to get an understanding. I hope that it's able to empower you, and I hope that you're able to share this video with your people, with your friends, with your family. Like I said, there's more videos coming. We're going to be going more in depth about the different assets available, about the different ways to get involved into it. So if you did like the video, please do hit the like button, subscribe to the channel, hit the notification bell, so that every time we upload a video, you can be the first person to know. If you have any questions or queries, write a comment down below or hit me up on my social media on Facebook, Instagram, under the tag Vukasakhecapital or at Vukasakhecapital. And you can also email me on Vukasakhecapital@gmail.com. Sorry, I actually forgot about that. But otherwise, guys, I really enjoyed our conversation. I hope you did as well. Join us for our next video where we're going to be talking about another financial asset. The third one is going to be coming next week. Check out our other channel as well, Hustle and Motivate with Vukasakhecapital. That one is more or less about entrepreneurship and trying to inspire people to get more proactive in getting started on whatever idea or thought they might have, but they're unsure about, is to motivate people to get started. Anyway, have a wonderful evening. I'm exhausted. I've been talking for way too long. I'm so sorry. But I hope you're safe, I hope you're good, and I wish you blessings. Cheers.